Good evening, everyone. It's Tuesday, the 23rd of April, 2013. Let's take a look at this market here. We had a pretty volatile day, obviously, due to that fake Twitter report in here that brought the S&P 500 down almost $1.75 or so intraday, and it came back just as quickly after it was found out that report was in fact false. It was a hacked report. So that which doesn't kill it only makes it stronger intraday, as we did finish near the highs for the day. And we can also say that on the daily time frame that we got the breach of this support for a brief moment intraday last week. We had the S&P 500 close below that 50-day moving average as well, and the market has bounced back really strong. We talk about the direction of the 50-day moving average and the fact that the market's innocent until proven guilty as long as the 50-day moving average is advancing. And the 50-day moving average will continue to advance until we get at least back below where we were about 50 days ago. So one down day isn't going to turn this sideways or down. And even if the 50-day moving average turns sideways, we really still have to break and hold below a key level of support before we really have to get nervous about this market. Of course, we have to get cautious when the near-term trends break, and we have, like last week, these lower highs and lower lows below the 5-day moving average. But we've recovered. We're back to beyond a 61.8% retracement of that downward move, and that level was actually tested here as well. So the S&P 500 is still in a primary uptrend. You can argue that it's up too much or whatever argument you want to make, but we have a pattern of higher highs and higher lows still. That doesn't change until we break below this 153.5 and stay below there. So nothing's really changed for this market. We've held the key levels that we wanted to see hold for this week so far, and until we get below and stay below there, it's innocent till proven guilty. The benefit of the doubt goes to the buyers. It doesn't mean you have to be bullish the entire time, but it means that the resolution of the uncertainty will typically follow the direction of the primary trend, which is obviously higher. The Nasdaq was up about a percentage point as well, and as I pointed out last week, the people who wait to sell after a key level has been violated are often going to get trapped, just like the people who buy after a key level. You don't want to chase after these big moves, and here we are to that point again where I don't think it makes sense to chase this market, but instead to look at the market as a market of stocks, not a stock market, and focus on the individual stock trades, the individual setups, that is. Obviously, it's very much influenced by earnings reports, and we're going to see Apple report here very soon. I'm not in the guessing business, so I have no idea what they're going to do, but we'll see how it settles in after the fact, and then look for the low-risk setups after the dust kind of settles. The Russell 2000 has bounced back as well. It, of course, held its key level at about 88.5 to 89. That's the level we've been focused on. And I was thinking that we had a chance of making it back up towards this level where we have the 20 and the 50-day moving average, and that's exactly where we are right now. So when we look intraday, we can see, let's take a look at a 65-minute time frame. We've got this prior important area of support near the 93 to 93 and a quarter, and I would expect that would likely become some resistance, but we'll see what happens when we get there. Let's try not to predict, but instead to be aware of all the situations and then manage risk accordingly. With the Russell, rather, you can see hasn't had as strong as a bounce back. It's not quite up to that 2/3 retracement level, and this market has had a bigger run. It looks like it's much more neutral on the daily time frame, as we have a 10 and a 20-day moving average below the 50. Now the 50-day moving average is flattened out in here. That doesn't turn it negative. It turns it more neutral in the near term. And again, this 93 area, we'll see how the market handles it in there. But we're not bearish in this market. You can point towards diminished volume on this rally if you like, for a reason to be bearish. But the fact is, we have this little pattern of higher highs and higher lows on a shorter term time frame with the potential for resistance up ahead. So it tells us that with a flat 50-day moving average, a declining 10 and 20-day moving average, there's a lot of indecision in this particular market, and it's better to focus on managing risk. Semiconductors, in this bigger range really of 34 and a half. We only spent a couple days outside of that, but 34 and a half to 36, and here we are at the top end of it again. I don't think it makes sense to be a buyer up in here. Perhaps we continue to see this market break out and continue on towards the highs of 2011. But it's, if you're going to you look at buying the semiconductors, then I think you have to say, where would your stop go? And I think below what we can now call this little flash crash, these lows from today are going to be important in all of these markets for tomorrow. All of these little levels that the market pulled back to are going to represent important short-term lows that we're going to want to see the market hold up above. So if you're a buyer of semiconductors, you want to see that 35 and a half level would hold. The financial market, the financial sector rather, the daily time frame, we saw in there that we did get a breakdown below that 50-day moving average. The first close below the 50-day moving average since December of last year. And what did the market do? It ran right back up through it. The direction of the 50-day moving average is much more important than one or two closes above or below, and that's something I'm going to say till they till I'm done talking about markets. We held the key level of support at 1780, and now we did get back above that 1820-25 area as well. So near term, I think we're probably a little bit more neutral, but with a primary uptrend for the financials. I wanted to talk quickly about Tesla because I wanted to mention that the other day. I mentioned back here on this day that it looked like the buyers were regaining control and that it had the potential for a big short squeeze. It's had a nice run in here, obviously, since then. Things are getting a little bit extended, but we've still got a big short position as far as we know in this stock. And, it's been making a pattern of higher highs and higher lows. So you want to be aware of where it's come from. I don't think it makes sense to be a purchaser up here. Today it did close below its volume weighted average price for the day, but we're still above a rising 5-day moving average. Buyers clearly in control. A lot of times when we see a heavily shorted stock like this, there will be some kind of news story that might bring it down intraday to 47, 48, something like that. But then I would expect that short sellers who are in a lot of trouble will then welcome that as an opportunity to repurchase those shares and relieve a little bit of the pain that they're feeling in the stock. But don't fall in love with any idea just because the shorts are getting hurt in here. It's been a good trade. Have a strategy to protect your profits. And thanks for tuning in.